Hey guys, this is Dana D'Angelo with Howard Hanna Real Estate. I have Mike Brocious with me today. He is a mortgage consultant and he is going to talk to us about two popular loan products that most people fall into. That is a conventional loan and an FHA mortgage that you could get to purchase a house with. So welcome, Mike.
Thank you for having me. So basically my job is to figure out what loan product is best based off of your current situation. Normally the two products that come up most is going to be a conventional mortgage or an FHA mortgage. Now there are other products out there that we can tend to put you in, but these are, the two common ones.
Okay.
An FHA mortgage is a government-backed mortgage. The down payment for this product would be 3.5% down, which is traditionally lower than a lot of typical products.
Okay.
In comparison to a conventional mortgage, the down payment for a conventional would be 5%, which is traditionally, but if you're a first-time home buyer, it is actually 3%. So it's really dependent on your current situation if you're a first-time home buyer or not.
Okay, so with the FHA mortgage, the down payment on the purchase price is 3.5% of the purchase price. And for conventional mortgage, it's 5% traditionally, or 3% if you're a first-time home buyer you can qualify for.
Yes.
Awesome. What about, can you talk a little bit about seller's concessions with the two different loan products and what exactly that is?
Yeah, so a lot of times, when you're first buying your first house, a lot of times people don't have a lot of money saved up. A great resource to go to if that's the case would be seller's concessions.
Okay.
Which is basically a seller contributing a portion of your, a percentage towards your closing costs.
Okay.
Which an FHA mortgage is up to 6% seller's concessions, which is 6% of whatever that purchase price is the amount that could be contributed towards the amount needed at closing.
Okay.
With a conventional mortgage, it's traditionally 3% seller's concessions. Unless you're putting 10% down or more, then it bumps up to 6%, which is the same as an FHA.
Okay. So if I'm understanding the difference, the FHA can get up to 6% in concessions. That's money that you get at closing from the seller to help pay your closing cost and or possibly go towards your down payment.
Yes.
And a conventional mortgage, typically it's 3% you can get in closing costs.
Correct.
Awesome.
Yeah, to put that in kind of comparison with figures, so if you have a purchase price of $100,000, 6% of that would be $6,000 towards your funds needed at closing.
Okay, so a greater amount of concessions can be had with an FHA mortgage.
Yes. Yep.
Awesome. What about the difference between private mortgage insurance with the two different loans?
Yes, so with an FHA mortgage, you would be required to have PMI, which is private mortgage insurance. Now, if you're putting 3.5% down, you're actually going to be having that for the life of the loan.
Okay.
And that's not going to fall off. The only opportunity to get your mortgage insurance off with an FHA would be to put more than 10% down as a down payment with an FHA. Then you have the capabilities later on to get it removed. It's usually around a 11-year mark that's able to come off.
Okay, so typically with the FHA mortgage, you're paying private mortgage insurance known as PMI for the lifetime of the loan.
Correct, yes.
Awesome.
In most cases, that's the case.
What about for a conventional mortgage?
With a conventional mortgage, if you put 20% down, you can actually avoid PMI or mortgage insurance, which is that extra little payment within your monthly payment. So private mortgage insurance is insurance on your loan, and it's built into your monthly payment, and it's to back the loan up in case you default on your mortgage.
Okay.
It's separate. It's important to know it's separate from homeowners insurance, because a lot of people get the two compared to each other, and they're not. Homeowners insurance is in case, in case of a fire or somewhat
damage to the property.
Yeah.
So with PMI, what if I'm putting 5% down on a conventional mortgage? Do I have to pay PMI?
Yes.
Okay.
Yeah.
Will it go away over the lifetime of the loan if I start with 5% down?
Yeah. So if you have a conventional mortgage and you're putting, traditional down payment of 5%, you would be required to have mortgage insurance. It would fall off once you got to 78% loan to value.
Okay.
All right. You can actually call at 80% and get it removed yourself. So you can get it removed, a few months ahead of time.
Okay.
As long as you're on top of your stuff and you know exactly where you are with your loan to value.
Okay. So for the conventional mortgage, you're not paying the PMI for the entire lifetime of the loan.
Right.
So it might be a little bit of a savings once that falls off the loan.
Right.
Great. Can you talk about the qualifications a little bit for each of those products?
Yeah. So an FHA has a little bit looser requirement when qualifying. That's the nice thing about the FHA is that you have a little bit different of thresholds. With a conventional, they might be a little bit tighter with, say the credit score and things like that,
Okay.
Which is always a good thing to have the FHA to go to as a resource.
Okay. So the big things I'm noticing that are different between FHA and conventional.
Mm-hmm.
With an FHA mortgage, you're putting down 3.5%. You can get up to 6% in seller's concessions.
Mm-hmm.
You are paying PMI or private mortgage insurance for the lifetime of the loan,
Mm-hmm.
and but there's a little bit looser qualifications to qualify for an FHA mortgage.
Right.
And then if you're going with a conventional mortgage,
Mm-hmm.
you're typically putting about 5% down. You can get up to 3% in seller's concessions.
Mm-hmm.
PMI drops off after you've paid about 20% of the loan.
Right.
And the qualifications to get pre-approved for a conventional mortgage are a little stricter. Is that correct?
Just a little bit more strict than an FHA, but yes. Yeah.
Okay. So if someone isn't sure on which product to use,
Mm-hmm.
what would they do?
Obviously come see me and I will figure that out for you. Whether, one thing that we always want to look at is how long you're going to be in the house for. So if it's your starter home, you're only going to be in the house for say 5 years, and you're going to have mortgage insurance regardless of whatever product you go into. Sometimes say we'll look at the interest rates based off of both products. If it makes sense to go in an FHA because it has a lower interest rate, even though you're going to have mortgage insurance for the life of the loan,
Right.
you're not going to be in
If
the
it's
house
not,
forever. So
Yeah.
by that time, even if you went with the conventional mortgage, you would have been out of the house by the time the mortgage insurance would have fell off anyway. So there's different things that we want to look at and kind of scenarios to go through and figure out what option's best for you.
Gotcha. So if we were to give you a call and sit down with you,
Mhm.
that's kind of your job. You weigh the pros and cons of each mortgage option and give us your best advice on which way to go, which product would be best for the client.
Right. Yeah, I look at the big picture. I don't look just, what's better for you right now today. We look at what's good for you down the road too.
Awesome. Well, thanks for joining us today, Mike. I hope this answered some of people's questions about FHA mortgages and conventional mortgages. If you have more questions, please post them in the comments below, or feel free to send me or Mike a private message, and we'd be happy to get you the answers to those questions. If you think friends or family would benefit from this video and can get some questions answered, please share it with them on Facebook. It's also going to be posted at YouTube, and we hope to see you guys soon. Thanks for watching. Have a great day.